Hi, good morning, good afternoon, and good evening, everyone, depending on which part of the world you're joining us from. My name is Shai from the Market Development Team for Lloyd's Asia, our platform in Singapore. A very warm welcome to everyone, and we're delighted to bring you once again the Lloyd's Academy Asia Pacific, Middle East, and Africa educational program for 2024. At this moment, we've got over 1,000 signups from across the APMEA region, and we're very delighted on your fantastic level of engagement and interest. Kicking off this year's educational program, it is my pleasure to introduce our brilliant speakers, Chris and Mark from Lloyd's, with an introduction to Lloyd's in the APMEA region. Chris currently serves as the Lloyd's Regional Director for Asia Pacific, Middle East, and Africa, and currently based in Singapore. Chris has 36 years of experience in the international insurance industry, principally as a broker with extensive knowledge of both the Australian and London markets. He joined Lloyd in February 2015 with responsibility for market development and for liaising with market practitioners and regulatory authorities to maintain and develop Lloyd's presence in Australia, New Zealand, and Vanuatu. Meanwhile, on the other hand, we have Mark Tyson, who is the Chief Financial Officer for Lloyd's Asia Pacific, Middle East, and Africa, joining Lloyd's in 2020 as the head of tax based in London. Mark expanded his role to head of member relations and chief tax officer later that year, before moving to Singapore to take on his CFO role in April 2022. Throughout the session, feel free to ask any questions that you may have through the Q&A box located at the bottom right corner of your screen, and we'll be very happy to answer them at the end of the presentation. Just a reminder that this session will be recorded and uploaded online. And an important note, please remember to remain until the end of the presentation and complete the feedback form to receive your certificate of attendance and claim for CPD hours. All right, without further ado, let's get started. And I am handing over the time now to Chris to begin.
Shai, thank you very much. Thanks for the introduction. Brilliant speakers. I'm expecting a lot from Mr. Dyson here on this one, so you're going to have to back up at your end. Thank you so much, everybody, for joining us today. As Shai said, this is the 2024 annual webinar series. This has become a bit of an annual institution for us. It's one of the most important and one of the most engaged and connected mechanisms we have for communicating with our market in the region, and we're delighted to have so many people sign up again this year. I think last year we held 7 events across the series. This year we've already got 11 topics lined up for you. As Shai said, last year we had 680 odd attendees registered for the events. This year we've already got over 1,100 and we're kicking off today. So fantastic to have you with us. Next slide. Thank you, Shai. So as I said, today is really going to be just an introduction from myself to Lloyd's in the Asia Pacific, Middle East and Africa region. I'm going to provide a bit of update on some of the historic background to Lloyd's, how we operate, and then go into some detail around the APMEA region specifically. And then Mark's going to talk a little bit more about how we actually operate from a capital perspective and understanding the capital structures that sit behind Lloyd's and how that works. Next slide, thank you. And next slide, thank you. So I think just to start things off today, it's always important to have a look at who we are within Lloyd's and what we are and what we're not. Starting at the very beginning, what is Lloyd's? Well, Lloyd's firstly is not a bank. We get confused very, very quickly in terms of who we are and what we are. Lloyd's Bank has got nothing to do with us. We were actually created 77 years before Lloyd's Bank, so they stole our name. We didn't steal theirs. So if there's an apostrophe in the Lloyd's, it's us, and if there isn't, it's generally them. We're also not an insurance company, which is a common misconception. We are a specialist insurance and reinsurance marketplace made up of individual people and individual capital providers trading for their own rights. So we're headquartered in the City of London in number 1 Lime Street. A lot of you, I'm sure, will be very familiar with the building that we trade out of, which is the Lloyd's building, opened in 1986. It looks a little bit like a coffee machine, so you'll recognize it when you're walking around the city in London. The way our market works is we are literally a trading floor where we pull together capital, capacity, and underwriting expertise within our marketplace. So it is a trading floor where individuals are brought together. It is not one business trading independently. And I'll give you a little bit of an idea of the scale of the Lloyd's market. So the London insurance market across the board employs around 55,000 people at the moment, and around 40,000, over 40,000 of them actually work in the Lloyd's building every day. Before COVID, we would have on average about 3,500 people in the underwriting room at Lloyd's every day, brokers and underwriters coming together to do deals and to trade risk. Around the COVID period, obviously things changed a little bit and we had to operate on a different style of trading platform, getting some electronic trading going in place. And since the reopening of the Lloyd's building post-COVID, we've actually undertaken quite a lot of work to rethink and re-engineer how we trade. Last year, about this time last year, we actually took the decision to close the underwriting room at Lloyd's for only the 3rd time in Lloyd's history, as we refreshed and reimagined the way that the trading floor could actually operate more effectively. I've been back to Lloyd's twice this year, and I can say that the market is back. It's a fantastic change. We've really livened up the market. Active trading is going on in the underwriting room, and deals are getting done. Looking at the global choice slide there, one of the unique features of Lloyd's that as well as having the central trading floor and the hub based in London, is that our market participants have access to a global network of insurance licenses. This is one of our unique and extraordinary features of the market. Whilst we trade out of a London hub, we actually have unrivaled expertise to help risk, but also to distribute capacity and expertise around the world in all sorts of territories, all sorts of different lines of business, different locations, industries, and different levels of complexity. When you're trading at Lloyd's, you actually have the ability to trade in entities which are licensed onshore in over 80 countries, onshore reinsurance in over 100 countries, and actually cross-border offshore reinsurance licenses in over 200 territories around the world. So it really does give you extraordinary levels of choice. Next slide, thank you, Shai. So unfortunately, you can't talk really about Lloyd's without providing a history lesson. So apologies for those of you that never liked history in school. But when you've been trading as we have for over 335 years, it's quite difficult not to talk about Lloyd's and actually talk a little bit about our history. Just by way of background, the very first reference to Lloyd's was actually made in 1688 in a journal called the London Gazette, which was a sort of a everyday newspaper of its time. And it was making reference to a reward that was being offered for a horse that had been stolen. And whoever had any information about the stolen horse was asked to provide that information to Mr. Edward Lloyd's coffee shop. And that was the first known reference to Edward Lloyd's coffee shop in 1688. It was a coffee shop that at the time that was frequented by mariners and merchants and sailors and ship owners who would congregate in individual coffee shops around London. The mariners would go to Edward Lloyd's coffee shop. The grain merchants might go to a different coffee shop. So industry people came together to share knowledge and intelligence and ideas. And Edward Lloyd's shop became where all of the mariners and the development of the marine insurance market and the London market occurred through that connectivity. So throughout history, and major historical events over the years, Lloyd's has always been at the forefront of insurance, and particularly around innovation in the insurance marketplace. Next slide, thank you, Shai. So talking about innovation, Lloyd's does have a very long history of breaking new ground and therefore a very strong reputation for innovation. There's a number of firsts. Interestingly, until the end of the 19th century, so around 1900, before 1900, Lloyd's was almost exclusively writing marine insurance. So for the first 200 plus years of our existence, all we did was marine cargo and marine hull effectively. But at the turn of the century, there was a specific underwriter in Lloyd's called Cuthbert Heath who really started innovating and developing new forms of insurance to meet the demands of the world as it was evolving so quickly. As an example of that, Lloyd's underwriters in 1904 wrote the very first motor vehicle insurance policy ever written. Now, as I've just said, at the time, Lloyd's was only writing marine business, so we had no motor underwriters per se. But one of the marine underwriters was clever enough to come up with a concept of insuring this new development in these new motor vehicles. But because he was a marine insurer, the only way they could think to describe the particular risk in the policy was by talking about the motor vehicle being a ship navigating by land, which was the logical approach that they took. So deep-rooted marine history within the market, as you can tell. The Lloyd's market also wrote the very first aviation policy in around 1911. That was an interesting one. It was the Wright brothers' first flight. Shortly afterwards, the industry set up a aviation insurance association, but it was disbanded about 3 years later because the members didn't think there was going to be any future in the history of the aviation world. They didn't think literally it was going to take off. So we do occasionally make mistakes over the years. The first satellite launch in 1965 was a communications satellite called Intelsat-1. We insured it on pre-launch. You can imagine those of you in the industry who understand risk and risk transfer, a lot of it is to do with a historic analysis of past data and statistics to set an appropriate price. Very difficult when you're insuring the very first satellite launch because you've got nothing to go on. It's literally just a bit of a punt. So an interesting one for us. And then over more recent times, we've been heavily involved. Over 30 years ago, we wrote the first cyber policy in the Lloyd's market. New evolving technologies and risks sharing economies, artificial intelligence. There's a lot of activity that's still going on to this day in our market, leading innovation in risk transfer. Next slide. Thank you, Shai. We also have quite a strange reputation for insuring odd things. We've got quite a strong track record on insuring things, as you can see, like a wine taster's nose. David Beckham's legs we insured for £100 million. I'm not sure we'd get anything like that for the the English football team's legs at the moment. They don't seem to be working very well. Things like Bruce Springsteen's voice we insured for £3.5 million. And the other historical item of interest that always crops up is the Titanic, which Lloyd's insured all of the hull and machinery risks associated with the Titanic in 1911. We insured it for £1 million and ended up paying out in 30 days of the sinking because it was pretty clear that there was not much salvage there. The premium for that, in case you're interested, was £7,500 at the time. Next slide. Thank you, Shai. So how's Lloyd's going at the moment? Well, the reality is that Lloyd's is thriving as a global marketplace. We're in incredibly good shape, and the market has been, really performing extraordinarily well for investors and for the market generally, and being able to support growth and ambition around the world, and also increasing risk and intangible risk that we're seeing more and more of. In 2023, the market wrote nearly $65 billion in premium globally, which was an increase of about £7 billion over the previous year. So about nearly 12% increase in the business. Not surprisingly, a lot of the business that we get comes from the Americas and notably from the United States. So almost 50% of the premium that Lloyd's writes comes from the United States. And given, again, the name crops up again, Cuthbert Heath, who I mentioned earlier, he was instrumental in developing insurances across the states at the turn of the century, and he was heavily involved with insuring property risk in San Francisco in 1906 when there was an 8.3 magnitude earthquake that effectively destroyed San Francisco. He took a very sensible approach at the time, and he gave instruction to his agents in San Francisco to pay all of our policyholders in full, irrespective of the terms of their policies. His view was that the Lloyd's market's role was to return people to the position they were in before disaster and not quibble about some of the detail. Now that, as you can imagine, set an incredible legacy for us within the Lloyd's market and a reputation that has never been tarnished. So the US now represents, over 30 billion in premium coming into the Lloyd's market, mainly thanks to the good graces of Cuthbert Heath and his investors at the time, who did the right thing by people. It's also interesting to look at our part of the world. So the Asia Pac, Middle East and Africa region, 15% of the Lloyd's market in terms of premium at the moment. But what's really interesting for us is that we are growing at a much faster pace than the rest of the world. As a population within the APMEA region, we oversee around 6.2 billion people, which is over 80% of the world's population fall within the APMEA region. We also have 133 countries that we're responsible for. Again, it's over 70% of all United Nations recognized countries. So we have extraordinary scale and opportunity, but only 15% of the Lloyd's global market share. So significant opportunities for growth. Market penetration, insurance penetration in our region is only around 1.5%. So you can see that the opportunity to provide more products, more solutions to communities, and more stability in the events of disaster gives us a really good opportunity to continue our region going forward. Next slide, thank you. One of the unique feature of Lloyd's is what we call our financial structure or our chain of security. Mark is going to touch on this, so I'm not going to steal his thunder. He's going to give you some detail and explain why the chain of security is so important to Lloyd's and how it operates in some detail. But I thought, given I'm in full-blown history teacher mode at the moment, previous slide, thanks, Shai. Given that I'm in full mode at the moment on history lessons, I thought I'd just give you a little bit of background as to explain how the central fund came about and why we have a central fund. And the story is this: in 1923, we had an underwriter at Lloyd's called Stanley Harrison, who was a motor underwriter, who was underwriting some fairly complex motor credit type insurance lines. And he ran up debts of about £360,000 that he was unable to satisfy with the assets of his syndicate. So he went cap in hand to Raymond Sturge, who was the chairman of Lloyd's at the time in 1923, and explained what had happened and that he'd basically run up these debts and couldn't meet the obligations. So Raymond Sturge pulled the market together, got all of the members of Lloyd's, the capital providers at Lloyd's together, and explained the situation, and put a proposition to them that if they, as a market, did not satisfy Harrison's debts, then the market's reputation would never recover, and that we may as well shut down Lloyd's. And so the market came together and decided to contribute in proportion to how much premium they'd written the previous year to pay off Harrison's debts. The maximum amount paid by any one member was £10,000, and the lowest amount paid was 8p. So a very broad spread on the amount of money people put in. So having resolved that particular situation, the Committee of Lloyd's and the Council decided that they needed to do something to prevent that kind of scenario happening again. And so 2 years later, in 1925, the new chairman of Lloyd's at the time, who strangely was actually a chap by the name of Sir Percy Graham Mackinnon, who was my great-great-uncle, actually introduced the central fund at Lloyd's, which was a mechanism of last resort where all members of Lloyd's would contribute a small amount every year to build a pool to effectively mutualize the market so that this type of scenario would always be protected and Lloyd's policyholders would always have that level of protection going forward. So having explained how the fund came about, I will then let Mark, once I finish my piece, explain to you how it actually now operates. Next slide, thank you, Shai. So how does the Lloyd's market work? Well, at its very core, Lloyd's is just a marketplace, as I said before, made up of independent traders who come together under one roof to buy and sell their wares. In this case, we're talking about risk. So the building that I talked about earlier, you can imagine as the marketplace. For those of you that are in Singapore or who have been to Singapore, I kind of think of it like a hawker center. This is basically the Lloyd's Hawker Centre, where we own the premises, we manage the premises, we sublease the stalls out to our stakeholders. People come in and they choose what they want, and prices are set and deals are done. It's independent businesses trading independently, but coming under a common umbrella with a common set of rules and controls and processes in place. So within the Lloyd's marketplace, we have the capital providers on the right-hand side of the screen, who are the people that put up the backing, the financial backing to protect the risks that are being taken on. In Lloyd's case, almost all of the capital now is coming from trade and institutional capital. We still have, I think, just under 10% of private capital members, which are individuals who pledge their own wealth to support an annual venture which takes on the risk, and then they share the spoils of that annual venture at the end of every year once the numbers have been calculated over a period of time. As I said, a lot of the trade capital is now coming in from global insurance companies. There's a lot of people in our market whose names will be familiar to you. QBE Insurance, a lot of the big American insurers have syndicates at Lloyd's. On the left-hand side, you have the business flow, and this is where customers come into the Lloyd's market. On the far left, we have big insurance companies around the world that want to buy reinsurance and share their risk that come to us. We have global companies looking for multinational policies across mining and energy and infrastructure who come to us. We have small and medium enterprise who come to us through different channels. Including things like cover holders, which in the distribution channel you can see there are the people that will accept risk on behalf of some of the names at Lloyd's or the syndicates at Lloyd's, distributing the products out into the global marketplace. So in terms of the distribution, we have 380 plus registered insurance brokers who are Lloyd's brokers, who are authorised to come into the market in London and place and transact the risks. We have the syndicates and managing agents in London who set up overseas branch offices to help distribute their product, and we call them service companies. So here in Singapore, we have 15 service companies who are branches of the London syndicates sitting here distributing capacity and taking on risk on behalf of their managing agents in London. And then around the region and around the rest of the world, we have nearly 3,000 cover holders who are effectively intermediaries. They are insurance intermediaries, but they are working on behalf of the syndicates to source and underwrite risk on behalf of the syndicates in Lloyd's. So they act effectively as an insurer, but they're not actually holding the risk themselves. They're passing it back to their principals in London. So the cover holder model allows Lloyd's to distribute globally some of the expertise and knowledge and product and capacity that we have sitting in London that wouldn't otherwise get access to that business. Just as an example, in Australia, we have 165 cover holders who are writing over $2 billion worth of business for the Lloyd's market on the ground in Australia with local customers, with local brokers, engaging day to day, face-to-face meetings, etc. A lot of that business wouldn't make its way to London if we didn't have that local distribution. Next slide, thank you, Shai. So as I said, fundamentally, Lloyd's is a global specialty insurance and reinsurance marketplace. Property and casualty classes do make up the majority of our business. As you can see there, we have about a third of our business is reinsurance, 50% property casualty, and then a lot of other classes making up the broad distribution. We do write we write well over 60 classes of insurance, 60 different lines of insurance, and most of them are available in most places around the world, either direct or by way of reinsurance. We also constantly are evolving and changing and adding new product lines as new opportunities come to the fore. So 30 years ago, we added cyber insurance. It hadn't been done before. It was a new product. So product innovation and product development are critically important for us to maintain pace with keeping up and make sure that our relevance is still there within a global marketplace. We do tailor-made policies for pretty much every customer in every sector. And as I said, we currently have more than 60 recognized lines of insurance and reinsurance that we manage within the Lloyd's market. Next slide, thank you, Shai. So as I mentioned, Lloyd's really is a truly global business, and you can see here a sort of a world map highlighting the three core areas where we operate. The light green at the top is insurance and reinsurance. This is where we have a license in country, in region, to write insurance and reinsurance business. The slightly darker green is where we are able to write reinsurance onshore in particular countries, and then the grey is where we have cross-border reinsurance opportunities. So businesses in those countries can reinsure some of their exposure outside of the country into the Lloyd's market. It's an incredibly strong patchwork of distribution and license access. It's one of the unique features of Lloyd's that once you as a company invest in Lloyd's and set up a Lloyd's syndicate, you automatically get trading rights in all of these territories. I mentioned earlier, for example, that QBE in Australia is a licensed insurance company in Australia. They're a well-known insurance company brand. They're independently capitalized. They work with the regulator in Australia. Why would they want to join Lloyd's? Well, the reason they're in Lloyd's is because of our global license network, because it allows them to write business in the US on a non-admitted basis. It allows them to write business across Europe, across the UK, and in other parts of the world. So it really is an opportunity for businesses to broaden out their distribution. We have a couple of conversations underway at the moment with insurance companies across the Middle East who are interested in looking about how they can globalize their offering through using Lloyd's licenses. Next slide, thanks, Shai. So I'm just going to touch briefly on our position in the Middle East, Asia Pacific and Africa. So we have operations across a broad range of territories in the area. We have been well established for a long period of time. You can see there that Hong Kong, Japan, Australia, South Africa and Singapore are all at the 25-year plus mark. So this year is actually the 25th anniversary of Singapore, the Lloyd's operations in Singapore, which we'll be celebrating later in the year with the global leadership team will be here. China's been running for 24 years, and then the Middle East and India more recently, but still quite well established in terms of what we do. We did bring together this region. It's quite an unusual region. Most entities don't operate Asia Pac, Middle East and Africa. It's quite a broad remit, but we took the opportunity to create this region off the back of Brexit, where the European operations were looking after Europe, Middle East and Africa. But obviously with Europe now running as an insurance company, it made more sense for us for Africa and the Middle East to slot in with the rest of our sort of sub-geographic region down in this part of the world. We have an increasing presence across APMEA. We think that APMEA is an incredibly important region for Lloyd's growth strategy. America is incredibly mature market and very well developed for us. Europe, we are still establishing the insurance company off the back of Brexit and building the business there. But in Asia Pac, Middle East and Africa, we have more of the emerging territories and the fast growth territories than anywhere else in the world. So it's a pretty exciting place for us. Next slide, thank you. I mentioned that we have a very big area to cover, and literally it goes from Casablanca in Morocco down to Vanuatu in the South Pacific, and from Johannesburg in South Africa all the way up to Tokyo in Japan. So an incredibly broad remit. We have Lloyd's offices in 9 cities across this region, with Lloyd's employees representing the interests of the markets and working on behalf of the market. And we also have legal representatives looking after our interests in 8 further cities as well. So we have quite a good distribution spread. We have a very strong market development team that are spread right across the region, and they are there to support the market with sustainable, profitable growth. So these are colleagues you can see on the screen who are working towards developing and helping evolve the relevance of the market, engaging with market practitioners, both from a distribution side, cover holders, brokers, through to the managing agents themselves. I did notice actually when I was looking at this slide that the team has somehow positioned my pointer, bottom right-hand corner, somewhere in the middle of outback Western Australia, in the middle of the desert. I'm not quite sure what they're suggesting, but I did actually check a map on this, and where they have positioned me seems to be halfway between a tiny little outpost called Jigalong and another place called Lake Disappointment. So I'm not quite sure what they're telling me, but the good news is I'm not doing that market development role anymore. We've got a new market engagement leader coming on board in Australia and New Zealand who will actually be based in Sydney, not in the middle of the Western Australian outback. So we'll be introducing her once she comes on board in a couple of months' time. Next slide, thank you. So just looking very quickly across the region, the APMEA region, and I'll just touch on a couple of the sort of the core territories for us at the moment. Obviously, all of the territories are core when it comes to Lloyd's distribution rights and our licensing network. So there are some territories here where we're very much focused on hold and maintain and protect in terms of our license position. And there are other territories where we see very strong growth opportunity. At the moment, we've got across Africa, as I said, we've got a Lloyd's South Africa business running out of Johannesburg. We've got 17 cover holders who are the third-party distribution agents I talked about, writing business on behalf of the market down there. We've got 4 legal representatives, Morocco, Namibia, Zimbabwe, and Mauritius, who are supporting us across the African region as well. We've had some pretty exciting changes in the last 12 months. We've got the very first Africa-focused Lloyd's syndicate has been approved in Africa Specialty Risks. We've had a new Lloyd's broker approved in country as well. So there's some interesting opportunities and some new license discussions underway across Africa. India, again, we've got some interesting opportunities in terms of some licensing opportunities with Gift City up in Gujarat, where we're talking to them about some ideas at the moment, and we've got a few plans as to how we can continue to evolve and develop what is probably our youngest license in the region. China, Japan, Southeast Asia generally, we've got some operational and license complexity that we have to deal with. The way the regulators allow us to trade is not traditional and typical Lloyd's. So we're looking at constantly enhancing and improving the way we trade in those places and improving operational efficiency for the market. But again, we have strong ambition in those areas. We have patience, and we have a long-term play in place in order to continue to be providing that multinational global access for the market and how we can evolve and develop new business opportunities as they come about. Australia and New Zealand, it's a case of pedal to the metal. It's the markets there are the most mature we have across the region. The way we trade in Australia and New Zealand is most reflective of the way the market trades in London. So it's much easier for us to maintain pace on growth there. And then Middle East is a huge growth opportunity for us. We're really excited about the opportunities across the Middle East. We've got a very strong regulatory relationship with an ambitious regulator who's looking to grow and build and develop in that part of the world. So the market is fully engaged and we're looking to continue to build and grow there. Singapore, I've mentioned, we celebrate our 25th anniversary this year. Next slide, please, Shai. And Singapore is, without doubt, the most important hub for Lloyd's outside of London. And I say that because we have the greatest concentration of underwriting expertise outside of London. We have over 350 people employed on the Lloyd's Asia platform. We have a stable platform. 10 of the current service companies have been on our platform here for over 10 years. And they have got very strong market positions, very strong local knowledge and expertise, quality underwriting authorization so that they can actually make fast and quick decisions. They're fully empowered. And very excitingly, I think this year is the year where the market here, the Lloyd's market, will write over $1 billion premium for the first time. So some really good, strong growth in Singapore, which we're going to continue to support. Next slide, thank you. I'm going to skip on a bit because I'm running a bit over time. If we could go on to the Lloyd's Lab slide, please, Shai. Yeah, thank you very much. So just very quickly on the Lloyd's Lab, I talked about innovation earlier. Until 5 years ago, the reality was that most of the innovation at Lloyd's was historic. We'd quite often talk about the fact that we innovated by insuring the first car, which was over 120 years ago. So I think, we really did have a bit of a blank spot in our history in terms of being properly innovative. And the last 5 years has changed that dramatically. We launched the Lloyd's Lab in 2018. It is going from strength to strength. Next slide, please, Shai. And we're continuing to sort of champion tech innovation and talent through the initiatives we've got within the lab. There are a couple of things I wanted to touch on here. The accelerator program is the best known part of the lab. We're on to our 13th set of alumni going through the lab, and I'll give you some stats on that in a minute. We've got a few different ecosystem projects going on around the innovation piece. Launchpad is a market innovation collaboration and capacity hub. We've got Future Minds, which is an 8-week product development program to help translate customer problems into value propositions. I like to describe that as solving problems that people don't yet know they have. So it's about forward thinking and scanning for opportunities to create solutions to things that people might be impacted by in the future. The other exciting thing here is our ICX, bottom left, which is a new class of business code that has been set up within Lloyd's, which allows all of our syndicates an additional 2% of their stamp capacity to focus on innovation business. So things that they wouldn't normally want to write because they're a bit new or innovative or untried or untested, it creates that mechanism for syndicates to be a little bit ambitious in their thinking and look to try and develop and grow new ideas. Next slide, thanks, Shai. So just finally, just the numbers on the lab are extraordinary. We've been running this for 5 years. We've had 11 cohorts of people go through, over 1,800 applications. We've had 110 teams, 112 teams now actually proceed through the innovation lab, and 95% of those businesses have succeeded. They're either still trading or they've had a successful buyout. And very importantly for us, over 70% of the businesses that have been through this process are still trading with the Lloyd's market and adding innovation and ideas and new ways of thinking to the way we run our markets. So a hugely important part of what we're doing. We do have a new cohort coming up. We've got applications open for cohort 13, which is focused on the Middle East and Africa theme. And those applications are open until the 14th of July, so next Sunday. From a market point of view, the way this works is that people come in with an idea, we help them fast track that idea, we work it through with them, we provide mentors to help them develop their ideas, and then potentially we look to get market investment or market engagement with those opportunities coming forward. As I said, a load of these alumni from the lab are still trading successfully with Lloyd's on a number of different fronts: parametrics, flood-based systems, all sorts, wildfire defense systems, all sorts of exciting stuff. Anybody in the market that wants to get in touch and talk to us about potentially being a mentor for some of these alumni coming through, we'd love to hear from you. I am now officially 5 minutes over my time, so apologies to Mark, but I will now hand over, and we will have questions at the end, but I'll hand over to Mark to talk you through the capital structure and ratings at Lloyd's.
Thank you, Chris, for that tour de force around APMEA and Lloyd's. So my name is Mark Dyson. I am Chief Financial Officer for APMEA. Previously at Lloyd's, I was Head of Member Relations, which deals with the capital in the funds at Lloyd's, and I was also Head of Tax. I probably have to apologise today as I've managed to catch the cold going around Singapore, so if my voice goes, apologise in advance. Today, I want to talk about three things. The first one is ways of participating at Lloyd's, which is the slide on the screen in front of us. And then the other two are the Lloyd's chain of security that Chris mentioned in a little more detail, and our current financial rating. So ways of participating on Lloyd's, from left to right on this slide, they get increasingly complex. So Lloyd's is an incredibly flexible structuring environment. There are very large numbers of ways of dealing. These have been largely codified here into 8 different ways. It goes from simply providing assets to a member at Lloyd's, which isn't even on the screen. It's sort of very low down, often done by banks, to collateralized reinsurance, where you take some of the risk, to taking a quota share in corporate members, to directly investing in syndicates, and then moves on to being an active participant at Lloyd's, where you are effectively running a syndicate. And I think all of these 5 syndicate options on the screen benefit from exactly the same Lloyd's licenses that Chris was talking about. The difference between them is really the increasing complexity and the increasing freedom of these. So starting at the bottom, what has been termed a Class 5 syndicate is an SPA, a special purpose arrangement. These are effectively a reinsurance vehicle, like a sidecar of a main syndicate. So the main syndicate will write the policies, which will then be reinsured into the SPA. The reason they're popular is that they have quite low fixed running costs. Lloyd's being a very low variable cost environment, but a fairly high fixed cost environment. So there's a certain size you need to be before it becomes extremely advantageous to be at Lloyd's. The Class 5 syndicate gets round that to some degree by leaving all the Lloyd's admin to the host syndicate, and the SPA can then be selecting what policies it reinsures into it and have separate investors. A Class 4 syndicate is a syndicate in a box, which has been talked about a lot. It's really an innovation product. It's looking at bringing new and innovative forms of business to Lloyd's. It's suitable for relatively small syndicates. A Class 3 syndicate, a captive, that's a new launch at Lloyd's. It's something that's only recently become possible, but it's proved to be quite interesting. The reason being that you can take your captives, which probably have quite a lot of fronting costs, and as soon as they become a Lloyd's syndicate, they get access to the Lloyd's global licensing, which can significantly reduce those fronting costs. And then the more familiar syndicates, Class 2 syndicates, a traditional syndicate with a managing agent that's separate, and a Class 1 syndicate, which is where the managing agent and the syndicate are in the same ownership. So as you can see, a huge amount of variability in the ways you participate. And behind this, the actual structuring of capital into the members and into the reinsurance vehicles that support all of these is, again, incredibly flexible at Lloyd's. It's a particular feature of the market. So we see a plethora of different structures to suit the tax and regulatory preferences of various investors. So you can spin on one slide, please, Shai. So this is really just going through the main active ways of participating at Lloyd's. So the key thing is that Lloyd's is evolving quite fast. some of these are relatively new. So the captive syndicate and syndicate in a box are all relatively new. The levels of ingenuity and a drive for simplicity at Lloyd's are quite surprising in the last few years. And I think allied to our success, I think we're seeing more and more interest in these, all of these, but particularly in the new arrangements. So thank you. Shai, could you spin onto the chain of security? So as you can imagine, with the very large premiums that we receive, Lloyd's has a very strong chain of security behind it. Broadly speaking, there are three layers to the chain of security. The first layer is the premium trust funds. So all policies written at Lloyd's, the premiums are placed into premium trust funds. Each trust fund is specific to a syndicate at Lloyd's. They are several assets. They are not subject to risk produced by any other syndicate. They are very specific to one syndicate. And they're subject to Lloyd's 3-year accounting. So it's probably beyond the scope of this presentation. The second link at Lloyd's is what we call funds at Lloyd's. And those are effectively the members' funds. Those are the collateralization pieces over and above the first link of the syndicate assets. The third link is the central fund. And the central fund, as Chris was saying, covers the entire market. Those are joint assets that are available to any participant. The structure of the central fund is a little bit complicated. So it has its own assets, but it also has different layers of funds available to it, which strengthen the central fund over and above the assets that are held within it and owned by Lloyd's. So if we spin on one, please, Shai. So this is a diagram of how those assets stack up. Most policies are paid from syndicate level assets, which are within the premium trust funds. If it ever proved that those assets were not enough to meet the syndicate's requirements to pay policyholders, the syndicate would make a cash call on the members. And a cash call can be met in two ways. You can either provide fresh assets into the Lloyd's system, or you can take assets from your funds at Lloyd's and use them to pay down to the syndicate. In practice, well over 90% of cash calls are actually met with fresh assets, fresh cash coming from outside Lloyd's, which is a very unusual feature. So it's actually comparatively rare for us to touch the funds at Lloyd's. And that capital reload becomes quite important later on when we talk about rating. The central fund is relatively small, but relative to the size of each syndicate, it's actually very large, which means its firepower is very large compared to the risk run by any particular syndicate. Sorry, spin on one, please, Shai. So this is more detail on the individual layers. So the first link, the premium trust funds, very straightforward. So when premiums are received, they are passed straight into these funds. These funds are controlled by trustees, and the trustees are arranged between the syndicate and Lloyd's, who agree an appropriate trustee. They're held for the benefit of policyholders, with the members having a kind of remainder interest in those funds once all policyholders have been paid. So moving on another page, please, Shai. The funds at Lloyd's are effectively members' own capital. They form the over-collateralization layer. You could also regard them as the inflation proofing layer. The assets of the insurer have to grow in line with inflation in order for their business to maintain a certain size. They're always set the same way. So Lloyd's always looks at the risk within a portfolio for each member. It works out what the Solvency II risk is, and it adds 35%. 35% is a historic number. Solvency II risk takes you to roughly 1 in 200 risk. The plus 35%, depending on the business mix, takes you to 1 in 500 or 600, roughly around that area. But because every single member at Lloyd's has their capital set the same way, the capital level relative to risk is constant across the Lloyd's market. Now, some members do hold more capital than they need to, but none are allowed to hold less. And there is a regular process of making sure their capital is topped up, which is done in quarterly testing through the year. And once a year, they have to come into line, as we call it, to the pound to make sure that their capital is exactly Solvency II plus 35%. Coming on one more, please, Shai. So the central assets are, again, I'll talk about a little more on the next slide after this, but they are available to the entire market. They are discretionary, so the Society of Lloyd's could choose not to pay, but never has done. And I think if it ever did do, there would be very serious questions over the Lloyd's business model. So spinning on one slide. Thank you. Skip over this one, please. This one's just dealing with how assets get taken from different layers, and probably best to look at those afterwards. Um, the different layers within the central fund. So the central fund has its own assets. It also has a callable layer, which is a very small mutualized layer of 5% of the stamp capacity of each member. So those funds at Lloyd's are very slightly mutualized to that extent. But you can see that the very large effect it has on the central fund's available assets. There's also a subordinated debt layer, which is both internal and external. So those are loans from within the Lloyd's market to the central fund, and externally, which on any potential bankruptcy and incident would become effectively equity. So they add to the solvency available in the central fund. So the firepower in the central fund, as you can see, is very much larger than the premiums written, even by the largest of the Lloyd's syndicates. So coming on to the next slide, which is on the current financial ratings. Sorry, and one more, please, Shai. As you can see, we're rated by the major rating agencies in the world as very strong or excellent. And we've recently been re-rated by Standard & Poor's upwards to AA minus, reflective really from a stable outlook. So reflective really of the very, very strong performance of the Lloyd's market in recent years. How we're rated is interesting because the ratings agencies recognize the fact that the Lloyd's market is able to recapitalize and has done year after year after year. Most of the new capital that's requested in cash calls comes from outside the Lloyd's market. So that continuous reloading and the fact that every single member at Lloyd's is required to maintain their capital at Solvency II plus 35% means that there's actually a very relative to risk, there's a very flat capital profile across the Lloyd's market. It's not that some are enormously well capitalized and some are not capitalized. It's a very constant line across the market. When you ally that to the fact that the central fund is available to all, that's really the basis why the ratings agencies consider themselves able to rate the Lloyd's market as a whole rather than rating the Lloyd's market syndicate by syndicate. So these ratings apply to all Lloyd's market syndicates, and they apply to every platform we underwrite from. Thank you. Do you want to turn on one slide, Sky? Again, a little bit more detail from the ratings agencies, which I'll leave you to read if you want to read the slides afterwards. And Shy, on one more, please. And again, where we sit against our competitors, which shows that we are very strongly rated compared to the rest of the market. The single market rating, as I said, it goes across all syndicates at Lloyd's and applies to every policy. So it can be compared to an individual insurance company rating. Thank you. And I think that takes us to the end of the presentation, only 3 minutes over time. Back to you, Shai.
Thank you very much, Mark and Chris, for that very in-depth, insightful discussion of Lloyd's and the Asia Pacific, Middle East, and Africa region. And at this point, we are now open to questions. If you have anything you would like to clarify on and ask, to use the chat button here. And moving forward, I have a question here from Ludi. From the insurance buyer's point of view, can you, Mark, please explain how fast is the claim settlement once the quantum is agreed between parties?
Thank you. I think with Chris's very long history of knowledge of the Lloyd's market, it's a better one for Chris, actually.
Yeah, I'm very, very happy to take that question. Look, I think that the first thing to highlight on that is that just to restate the point, Lloyd's is not a single insurance entity, so we're a marketplace. So the speed of settlement in a claim situation is going to be very much contingent upon the parties involved with that contract. So individual syndicates will operate slightly differently. It'll depend on whether the payment is being made directly from a syndicate in London on a complex placement, or whether it's at a local level from a cover holder who's got lost funds and authorization to pay claims. It's an area we have never been good at. And I'm quite open about that. It's an area we need to do more work on. We are working on it quite hard. as a corporation, we think that there's a responsibility to try and improve the process and the mechanisms to facilitate faster payments from the market. The case I always use on this is that I talked about the Titanic sinking. We're very proud of the fact that we paid out every single claim on the Titanic within 30 days of sinking. We couldn't do that today, which is ridiculous. But the complexity of the way we trade in the accounting process and the parties involved have overcomplicated it. So we're putting in place something called Faster Claims Payment, FCP, which is really designed to speed up the entire chain to make sure that there is a digital electronic transfer of funds to the claimant as soon as possible, and using automated and AI systems to tap straight into the appropriate syndicates' bank accounts effectively to make those payments. So the answer to the question is not nearly as fast as we would like it to be, but we are working very, very hard on putting processes in place to make it quicker.
Thank you very much, Chris. Moving on to the next question. Where do you see the key growth areas in the Middle East, and how does this compare to the UK ROW market?
Mark, do you want to take that one? No, you don't. I'll do it. Yeah, again, look, a really good question. We've been spending quite a lot of time focusing on the UAE at the moment. The DIFC, which is the Dubai Insurance Financial Regulator structure, allows us very strong trading platform where we have syndicate service companies who are set up in the DIFC. They're able to write, cross-border business across the whole region from there. The cover holder model is also recognised. There's a lot of growth ambition from both the Dubai government and surrounding Middle East governments and entities. There's a massive amount of construction activity going along around across that region. And there is a clear ambition for the DIFC to become a genuine international insurance and reinsurance hub in not dissimilar terms to what we're talking about here in Singapore. So we see that as being a natural opportunity for Lloyd's to hub our underwriting expertise as we do in Singapore, and use that expertise to distribute knowledge, expertise, and capacity across the broader region. So, looking across into North Africa, into KSA, into the surrounding Gulf states, up into Turkey, and up into the Central Asian regions. So, we just think it's an untapped opportunity to deploy our expertise and our capacity better and more effectively across that region. In terms of how that compares to the UK and rest of the world market, again, we get stronger growth and faster growth in territories that haven't previously had strong and fast growth. So we see more opportunity for an increased pace in opportunity. We're always mindful about the importance of ensuring long-term sustainable profitability. So we are monitoring closely with the markets there from a Middle East perspective. Obviously, ensuring the transition to green energy is critically important. There's a huge amount of petrodollars from that region being invested into renewables. So, without the money going into renewables, you can't speed up the transition. So we are keen to ensure that we work with our customers to help them in that transition process by kind of not pushing them off a cliff, but working with them where they have a clear and transparent transition plan that is shown to be effective. So I think, between transition to net zero, construction, energy generally, undeveloped market in terms of insurance penetration and product, I think we just see it as a big opportunity and bigger than most other parts of the world at the moment.
Thank you, Chris. And we have more time for one more question from Alicia. How does Lloyd's envisage growing the Lloyd's Asia platform in Singapore? How does this compare to its growth strategy in London?
Okay, again, I think one of the things that is very clear to us is that we look at the performance of the Lloyd's Singapore platform, and the growth that we're seeing for Asia Pacific business written in Singapore is outpacing the growth on Asia Pacific business being written in London, and the performance of the portfolio that we're writing here is outperforming the portfolio that's being written in London. So for us, getting underwriting expertise and skill and knowledge closer to customer is a critically important part of how we continue to grow and develop in the region. The brokers, the customers want to be able to deal with technical underwriters that can have an engaged and detailed conversation about their particular risks in country in the right time zones, and that delivers a better product for the customer and a better outcome in terms of underwriting performance for the market. We've seen a very significant increase in the number of technical underwriters employed on the platform here in Singapore. I think there's been a 22% increase in underwriting staff in the last 2 years on the platform here in Singapore, and that is adding not just transactional letterbox people who are posting information and risks back to London, but properly empowered and authorized underwriters that are doing deals and making decisions. So we'd continue to see, significant growth. I sort of jokingly say that now that the Singapore platform is getting to $1 billion this year, I don't see it as being a teenager anymore. The Singapore platform for us is now a fully grown up human being and an adult making very strong, important adult decisions, and it'll continue to go from strength to strength.
Thank you, Chris. Would you like to add anything to that, Mark?
No, thank you. And I think the point that Chris made is really important, which is that not only has it grown faster in Singapore, it's also grown more profitably, which is just a tremendous thing to happen. I think that's got some attention in London, the fact that that's been managed to be sustained for a period of several years.
Great. Thank you very much, Mark and Chris, for a very insightful session today. I hope that this session helped our participants and attendees to learn more about Lloyd's and understand the Lloyd's platform in the region. So with that, we have come to the end of the session. Thank you all for attending today's first session of the educational program. And at this point, I will be showing a QR code for feedback. Please feel free to send us your feedback and complete this. You will be receiving your certificate of attendance through this link. So feel free to let us know your comments and feedbacks, and we'll see you at the next educational program next week on 11th of July about the clinical aspects of healthcare risk. Again, thank you all and enjoy the rest of your day. Thank you.
Thanks so much, everyone.
Bye.
Bye.
Right.